Hey everybody, today we're going to be doing another dividend analysis, and today we're going to be looking at Coca-Cola, or KO. As always, let's start by taking a look at the yield, and we can see they're sitting at right around 3%, which is a little bit above the S&P average. Nothing amazing, but not a bad dividend yield. Looking back through the history, we can see that since 2013, they have been raising their dividend every year. Not by a ton, as we can see it's been about 2 cents to 2.5 cents up until a couple years ago when they slowed it down to 1 cent. It is worth noting that during the whole crash in 2020, they did not suspend or cut their dividend and actually kept their increases going. So pretty good there, something to be happy about. Next, let's jump over and start looking at the numbers. First, we can go to our income statement, and we can look at our net income. We can see that it's been a little bit spotty over the past 5 years after a nice, very normal, staying around the same number. A little bit of drop, but not crazy. But as we can see over the last 5 years, we went from 6 to 1 to 6 to 10, back down to 7. Very interesting. If we look at our dividends paid, we can see that they paid out over the last 12 months just over $7 billion, while their net income was also just over $7 billion. This gives us a payout ratio of about 98%. That is a bit alarming. We want to see that at least under 75%, preferably under 50%. This is almost all of their income, all of their, essentially most of their profit is going to pay for their dividends. That's a little concerning. If that profit drops this year or next year, that dividend is going to be very hard to maintain. Next, let's go over to our free cash flow. And as we can see, free cash flow from about 5 years ago has been relatively steadily increasing. A slight dip down in 2018, but has been increasing since then. That's good to see. However, seeing the free cash flow increasing by 30% while the income is very spotty is a little interesting. I'd want to look into that a little more, see why they're able to keep increasing their free cash flow, but their income not so much. Last year's free cash flow was just under $10 billion, and if we remember, we were just over $7 billion in dividend paid, so that gives us a payout ratio of free cash flow of right at 72%. That is acceptable for a normal C corporation. It's below our acceptable range of 75%, obviously not near our ideal range of 50%, but just know that if they see a drop in free cash flow of any real kind, that dividend is going to start not being so safe. Once you get above 75%, there's not much room left, there's not much buffer. If this, say, dropped back down to, say, 8 billion, you're very close. If we get back to 2019, 2018 numbers, suddenly that dividend is not affordable. It'll have to be paid with debt or something else. So where does Coke get their money? Where's this free cash flow? Where's this income coming from? I'm pretty sure everybody knows that. The vast majority of it is going to be beverage sales. They have a few other things. They have some branding that gets them a little bit of revenue, but the overt majority of their income is going to be from soda, soft drinks, and other drinks. So, do you want to invest in Coca-Cola if you're a dividend or income investor? What kind of investor should be looking for this? For income investors, this is going to be a hard pass. There's not much here for you. You've got a 3% yield, which isn't bad by any means, but the dividend appreciation is low. You're looking at maybe a 1 to 2 cent increase per year at the most. Outside of that, there's nothing really here for an income investor. If you're looking for dividend appreciation, you have a little bit of something going here. I mean, everybody is always going to be buying soda and drinks, so they're never going to go out of business. That's not something that's going to happen. And if their numbers continue as they're going right now, if their free cash flow keeps increasing as we're seeing, maybe by 10, 15% a year, even 5%, you're going to be able to get that 1 to 2 cent dividend appreciation, and in 20 or 30 years, that's going to be a nice income for you. But right now, it's just not that much. The only other investor that I really see looking at this company is someone who's interested in a dividend and a very defensive stock pick. If we look back at Coke's history, we can see that over the last 10 years, their stock price really doesn't fluctuate that much. As we can see, really between $5 and $10. Even the huge drop, we went from $60 down to, $37? That's their largest drop really in their history. They've been increasing a nice little bit over time. So if you're looking for something defensive that has a nice little dividend, you got 3%. That's not bad at all. This could be a pick for you looking at a consumer staple. There are other companies out there that are probably a better choice, but as you can see just from the share price history, this is going to be a very stable stock price. There's not going to be a ton of fluctuation here. So if you're just looking for a nice little 3%-ish yield with some good, stable stock pricing, this could be something for you. Outside of that, I would tend to avoid this. The numbers just aren't there. There's other choices. Pepsi might be a better choice. You have other consumer staples like Johnson & Johnson or Smucker or Clorox who are really probably going to be better choices for you, probably have more upside potential. But if you're just looking for a little bit of stability with a little yield without much fluctuation, Coke might be something for you. I hope that helps, and thank you for watching.